Guys, D. Anthony, I'm going to go over some of the trade setups that were kind of going on both long and short here on the NASDAQ this morning. So today is March the 19th, currently rolling into the lunch hour here. Now, I've got some pre-market data kind of mixed into this bag here. Normally, I like to trade, heading into that first hour of the open between 6 a.m. and 7 a.m. Pacific Standard Time, and then 7 a.m. to 8 a.m. and 8 a.m. to 9 a.m. That's kind of like my sweet spot of trading, where I like to really focus on the price action. So if I just kind of go to, where the first potential setup happens at, that's at 5:45 in the morning Pacific Standard Time. Why is this a potential setup? Well, we were trading below the 20 SMA, which is this purple line that you can see on my screen. We get a close at 5:45 a.m. over the 20 SMA. You can see the previous two candles also consolidating here at this 20 SMA, and then we get this confirmation at 5:50 in the morning. Now, there's a couple of ways to play these type of trade setups as far as where you're looking to take profits. I'll show you where I like to personally get in on these scalps and where I like to take profits. So always, my stop loss will be a close below the reason why candle. So I put this yellow line here. So if this is the reason why I want to get into the trade, meaning we closed over the 20 SMA, my stop loss would always be below that. So if I kind of just look at the range here on this candle, it's around a 20-point range. So I'm going to give up around 20 points on this potential trade if I do lose. You can do the math on how much you would be losing depending on the number of contracts you're playing. For example, one micro contract, you're going to lose around $40, two of them $80, three of them $120, so forth and so forth. Now, to the long side, to the take profit, you can do one of two things. You can do a 1-to-1. If you're willing to give up 20 points, look to at least take 20 points or somewhere close to that, or just a little bit above it. Or you can use the ATR. Now, in choppier markets or in higher, volatile markets where price action, either is at a standstill and it's a little bit more choppy, or market, is just opening up and the price action screams up and down 20, 30, 40 points, you can definitely use the ATR. Now, if you don't know what the ATR is, it's just a study. It's an indicator. It's the average true range. And I like to put it on all my time frames. That's what's going on down here at the bottom of the screen. Now, if I'm looking at this specific time here at the reason why at around 5:45, my ATR is only sitting at around 17 points. So what that's telling me is that if I get into this trade and it goes up 17 points, take my profits. Okay. Now, whether you choose to hold a runner, you choose to wait for the full 20 points, you choose to hold for infinity and beyond, that's your prerogative. But what works for me is trying to target that 5-minute ATR on the take profit side after I get in. So if this is my entry candle, this is my stop loss, I'm looking for those 17 points. This was a winner, was actually one of the first trades that I took as soon as I woke up today around 5:15 in the morning, kind of, staggered onto the PC, turned on the charts and kind of seen that we were in an active play here. And I got in just a little bit late, but was looking for that 10, 15 points, 17 points if I can get it. Again, I try to get in, try to take some profits. Now, the second trade that happened was here, okay? And if we look at the time, it's at 6:35 in the morning, so the New York market is already open. Now, this is a very extended candle, okay? 51 points. So again, if you are going to risk one micro contract, you're going to lose about $100. If you risk two micro contracts, you're going to lose about $200. Three is around $300, so forth and so forth. With that being said, it's a little bit more risky to try to start targeting 40, 50, 60 points on the take profit side. Not saying that it can't do it. It's just a little bit difficult. So again, why does that ATR come in handy? Well, if you look at the ATR at 6:35 in the morning, ATR is sitting at around 20, 21 points. So in that particular case, your entry is at the confirmation below this candlestick on a following candlestick. That entry price is 18,077. The next 5-minute candle, which is your entry candle, opens up and goes all the way down to 18,053. So from 77 to 67 is 10 points, to 57 is 20 points. The ATR is sitting at 21 points. This would have paid at a 1-to-1 according to the ATR. This should have been your second winning trade. Now we have a little bit of a dead cat bounce here. I also teach this strategy inside Evolution Traders, how to catch this bounce, but we're not going to really go over that in this video. I also teach how to catch this short. We're not going to go over that in this video. I don't want to overload you with a million different things. Let's just stick to one thing at a time. Let's get really, really good at one particular setup, and let's continue to go from there. The next setup is at 7:35 in the morning Pacific Standard Time, and we get that close back over the 20 SMA. That ATR is sitting at around 25 points. So from 25 points, you would be looking to get into this trade at a high price of 18,120. That would be here on this next candle at 740, and it goes all the way up to a price of 18,146 from an entry price of 18,120. This would have also given you that 25 points. So again, I want you to look at how close it touches that ATR, which is at this linear regression, and then immediately backtracks, right? So again, get really good at identifying the move, using your stop loss here at the reason why low, and getting in and taking those profits when you should. Now, again, that's all the setups that have happened. We might look to break out over this 200 SMA, but again, I just wanted to kind of go over some of the trade setups that I was looking at today. Hope you guys all enjoyed the video. Like, comment, subscribe, and I'll see you guys on the next one.